Listen, so the IRS projects that Americans will see an average of $1,000 boost on their tax refund thanks to the Trump's one big beautiful bill. Now, this is what you gotta understand. You could position yourself to get a bigger boost if you understand what I'm about to say in this video. In the first 5 minutes, I want to put more money in your pocket, and if you stick around to the end, I put even more money in your pocket. And if you're a tax professional, well, it's something in the comments that can really put more money in your pocket and make you one of the best or fastest tax preparers in your industry. That being said, when it comes to boosting your refund, sometimes it does come from tax cuts, and that's what this article is all about, which I'll dive into. But you have more power than you believe. What if I told you that you had more power to increase your refund than the government? Would you believe me? See, many of you who understand tax deductions, or at least have an idea of what it looks like to benefit from the tax code, you believe me as soon as I said it. But some of you still leave money on the table, and that's what I want to avoid right here, right now. See, an extra $1,000 boost in your tax refund is great. Don't get me wrong. So I'm not downplaying it. However, if you understand that you have more power than the government, as well as you will have more power than your tax preparer, now that positions you to take a look at what you have control over and figure out what can you do personally that can increase your tax refund. Now, you got to understand that boosting your tax refund this year is based on what you did last year. I'm going to say that again. Boosting your tax refund this year is based on what you did last year. It's not based on your tax preparer for performing some type of magic or telling you they going to get you the fattest refund. If they saying they're going to give you the fattest refund and they telling everybody else they're going to get them the fattest refund, without getting data from you, because everybody's situation is different, then it's probably something that they're doing that they shouldn't be doing that could put you at a disservice. And I say probably because not every tax preparer acts like that. But I want you to understand that certain things you did last year can boost your refund significantly. What do I mean? I know for a fact more people than ever are doing things to make money outside of a job. More people than ever are doing things to make money online. More people than ever are doing things to make money from their phone and from the comforts of their home. Why is that important? Because it's the side streams of income, the things that you do outside of a typical job, that position you to not only make more money, but also save more money in the form of tax deductions. Tax deductions convert into lowering your tax liability, lowering your tax bracket in many cases, qualifying for certain credits, and also fattening your refund. So I need you to take a step back and say, okay, what did I do last year that was in pursuit of a profit outside of a typical 9 to 5? What did I do last year? For many people, that could have been some type of side hustle. You could have been buying and selling things, buying things wholesale, selling them at retail. You could have been selling things and posting them on eBay, Facebook Marketplace on a regular basis. You could have been doing things such as the gig economy, gig work, making deliveries, doing certain levels of driving, doing courier services. All of these things put more money in your pocket, but open up a boatload of tax deductions that put even more money in your pocket. Quick example, if you were doing driving related jobs, and let's just say you drove on the low end 10,000 miles for business. That's on the low end because most people drive an average of 1,000 miles a month. But on the low end, let's say you drove 10,000 miles a month. Well, if they're paying over 50 cents per mile, I think it's like 60 something cent right now. If they're paying over 50 cents per mile, that means for every 2 miles you drive, that's $1 deduction. So if every 2 miles you drive is $1 deduction, that means that 10,000 miles is a $5,000 tax deduction. That's not dollar for dollar, but $5,000 tax deduction can increase your refund significantly. And that's just one tax deduction of many. You see, it's hundreds of tax deductions that you qualify for when you have some type of home-based business, phone-based business, mobile business, a business that allows you to operate and make money with really not many strings attached. That positions you to put more money in your pocket. So if you had $5,000 in the form of tax deductions, that could potentially increase your refund by more than $1,000. Very important. A lot of people also participated in what I said, buying low and selling high. So if you're buying things and you're selling them for a high price, especially if you're driving around and you're looking for things that you can buy at a cheaper price and then you sell it online, the miles that you drove, the money that you spent to acquire that thing, the marketing that you did, the phone that you used to post that content, all of these things attached to what it took in order for you to make money become tax deductible. So if you're using your phone to market, then portions, if not all of your phone, becomes tax deductible. If you're using your phone to do certain things from a data standpoint, all of these things become tax deduction. Now, this is really going to knock your socks off because a lot of people are also posting on social media doing content. And now almost everyone has the ability to be content creators. Not almost, everyone has the ability to be content creators if you have a phone. Well, if you are trying to get monetized online or if you've been monetized online, any platform, and now you're posting more frequently, posting more strategically, you are now indeed operating social media with the intent to make a profit. This makes you a content creator. And as a content creator, the world is your oyster. That means that you could position everything you do to practically be tax deductible as long as you're doing it with the intent to make a profit. As long as you're doing it knowing you're aiming to make money. And if you do that, the IRS rewards your activities as ordinary and necessary activities. If you have to create content, then it's ordinary and necessary for you to use some device that records the content and post it in a place that allows you to get exposure, get eyeballs, and attention equals currency. So if you have people's attention, then that can convert into currency in the form of the platforms paying you, in the form of you selling a product or service on the back end of it, in the form of you doing things you were doing anyway, but now you're recording it and posting it and aiming to make a profit. Now that makes your lifestyle tax deductible. You already gonna pay the phone bill anyway. You already gonna, pay the internet bill anyway. You already gonna go on that travel vacation anyway. But the fact that you made your content a significant piece to whatever you did makes that tax deductible. Now, it all boils down to record keeping. You want to keep your records. You want to make sure that you get with a tax pro who understands tax deductions because this puts you in a position to put more money in your pocket. If you don't remember anything else, remember, you have power and control based on what you did last year to affect your refund this year. And that's more important than this article, but I had to share that because a lot of people miss this. A lot of people leave their money on the table. But let's talk about what the government has in place that could position Americans to get an average $1,000 boost on their tax refund thanks to the Big Beautiful Bill. Now, they actually changed the naming of the Big Beautiful Bill to Working Families Tax Cuts Act. So that way, it targets those working families. Now, this is what you got to understand. The things that change that can help you is things that may or may not apply to you. That's why I wanted to front load the video from an angle of telling you, hey, these are the things that you control beyond what they control. So the larger contributor to the tax cut driving higher refunds is new overtime deduction, which represents roughly 38.7 billion or 30% of the law's 129 billion in individual tax relief in 2025. Other major drivers include the expanded standard deduction. So the standard deduction increase, that's basically the deduction that everybody gets based on their filing status. So if you're single, you get a standard deduction based on that. If you're married filing jointly, and that increase, so that increasing can lower your tax liability, aka give you a larger refund. So that played a part. The refund surge is landing on an IRS that is significantly smaller than it was a year ago, raising questions about whether agencies can process returns and deliver refunds smoothly. And everything is going digital. They're not doing paper checks, just for the record. And basically, them doing that could potentially speed up the time to which you get your refund. But on average, you can calculate about 11 days outside of when your refund was accepted. When your refund was accepted, typically 10 to 11 days, you might be getting a refund based on the data and based on the direct deposits. Now, those are the two main things that affect most working Americans: the no tax on overtime, as well as the increased standard deduction. There are some more things, but those are the ones that affect Americans the most. But what can affect you the most is what you did last year. And that's what I want you to take away from this, because they're banking on the fact that more people are going to get larger refunds and more people are going to blow their money and give it right back. But we want you to understand the importance of you controlling your refund so you can do it year over year and use it strategically.